Good day, guys. Welcome to Forex Walker. Welcome to episode 60. On this episode, we'll be talking about macroeconomics. Do you guys remember the Global Supply Chain Project Index? That's what we'll be talking about. I told you that when the the year is moving towards the closure, when we're moving towards the closure of the year in the southern hemisphere, which is October, which is between September and December, and from for the southern hemisphere, and uh, March to June for the northern hemisphere. I talked about the global supply chain pressure index, bringing in those commodity currencies with it. So I actually expected two beeps lower, like the first beep and the second beep. We only got the first beep into the negatives, and the market, the global supply chain pressure index actually gave us a turnaround immediately. But I was expecting a second beep lower into the negatives. But then we're already in October. November is about to start, and this is the last quarter of the year, which I because of this thing is actually telling you about what is happening now. And on that previous episode, on episode 59, I was talking about how I was expecting the I was talking about the CAD. This is the CAD, the Euro CAD, in which I was expecting to buy the CAD, looking into what the global supply chain pressure index is doing. And I'm actually optimistic with the CAD exiting the recession. I believe that this might be the last kick of a dying horse, where the CAD will actually exit the global the recession. At the moment, we just received an interest rate cut on the CAD. I was looking at the NZD, so I believe I might be confusing the CAD with the NZD, but I believe that we got an interest rate cut on the CAD, which will give it enough strength to actually push higher, because interest rate cuts are were designed to relieve the businesses, making money cheaper. So it becomes easier for the businesses to take loans for their businesses to actually survive. So when loans are cheaper, uh, most economies they do well, but at the moment the cat is still deep in the recession, and it might exit, but I believe that might be last. That might be next year, where it will exit the recession completely. So I'll be looking into that. I'll be looking deeper into that. Remember, I was telling you guys that the euro is also bearish and the CAD is also bearish, but I'm looking forward to buying the CAD in the month of October, and I'm finding difficulty with the algorithm, because I don't want to tell you guys on which day the CAD will be bought. So these people will might as well. It's a prosecutable offense, because they'll end up asking questions like, "Are you registered with the Financial Services Board?" And if you're not registered with the Financial Services Board, then you might be prosecuted for saying on this day the market will be bullish on that day. I mean, if you look into most of the videos that are being published by most of those guys who are investing, they will never tell you that on this day this currency will be moving that way or that way. So yes, they do sometimes through they do those things through brokers. But when a broker is paying you, the broker might pay you and tell you that go and tell your trading group that the market will move this way, and your group will lose money. And your broker, they look for people who have a lot of followers, and once you say something, the broker will make money. But most of those brokers are local brokers. My broker is not local, so I may not be able to help them make money. So at the moment, I'm looking into this EuroCAD. It might not give us that much of a pullback. The reason why I chose this EuroCAD is because of the spike in the volatility index, because both currencies become weaker when the volatility index gives us a spike, the pullback becomes shorter. The weakness in both currencies reduces the pullback. So it helps you save money, because this creates some kind of a safe haven for your stop loss. Let's say your entry level was somewhere between these lines and your stop loss was above here. It saves you because it reduces the spike, pullback in the volatility index, because both currencies are getting weaker. So at the moment, I'm looking forward to buying the CAD in October. I cannot say which day, but I will be buying it in October, and I'll wait for that date. And the euro is being sold based on the Danish krona. So that's how I'll be trying to catch this trade. We are still at the 50% feed. We're just looking for that tiny pullback. Because both currencies are weak, I'm not expecting the market to really give us that much of a pullback. It might turn around on the 38.2. Remember, we have a tiny spike here. It might turn around here, it might turn around here, but I'm not expecting that much of a pullback. Even if it lands on the 23.6, the 23.6 here, it'll be fine with me, and I'll be able to place my sell stop and sell the market and see where it goes. So this is one of the trades that I'll be looking into in this month of October, the Euro CAD and that Euro pound that you saw. So here we have the famous WTI crude oil. So here it says West Texas Intermediate crude oil cash. So this is uh, something that I use for the CAD when I'm looking forward to trading the CAD. Remember, I use a few things like the Global Supply Chain Project Index for me to be able to trade those commodity currencies, your AUD, your NZD, uh, the euro, and other currencies. But at the moment, I'm looking forward to actually taking a bull run on that CAD that you saw. Remember, crude oil contributes 10% of the GDP in Canada. So let me show you something. Part of the reason why I believe that the CAD is exiting the recession is because of this WTI crude oil. The reason is that when a currency jumps into a recession, you see some consistency where the currency keeps moving lower and lower like that within this weekly time frame channel. And once you see the currency failing to hold these lows, it's no longer holding this trend line. It's giving you a break above, giving you breaks all the way up there. This is what I mean when I say the CAD is about to exit the recession. So this is what I'm looking into, and I'm expecting the CAD to actually exit the recession, because we were in a downtrend for the recessionary interest rate cuts in the CAD, and we're actually starting to climb. And this is the lowest we went into uh, this uh, uh, this weekly time frame channel, and or this primary channel, and this is the lowest we went. This low that we have here might actually land on this primary trend line that we're looking into. So even if it doesn't land all the way down here, I'm not expecting it to break below this low. But if this is the lowest it can go, I'm expecting it, especially with that this volatility index doing what it is doing. I'm expecting a bit higher next month. But this thing is on the monthly time frame is really slow. So you cannot expect it to just give you a bit higher and expect to take the next trade. But this is what I am looking into, and I'm expecting the CAD to exit the recession the same way that the WTI crude oil is doing. So these are my expectations, and I'm expecting to see that beautiful move that will give me those longs in the CAD. So these are the current the systems that I'm looking into. You cannot look into one thing because the global markets are globalized, they're integrated into each other. So when you look into a commodity currency that is producing oil, you need to look into many other things, not just the currency by itself. Uh, those who are buying the US dollar, uh, the buy is not sustainable because of you know sanctions and all of those things. You cannot expect a currency to just go bullish because even with the market sentiment and macroeconomics coming together and telling you that this currency will not pump higher, and you just keep buying it and buying it, the buy is not sustainable. Even though the currency is moving higher, but the buy is not sustainable. It might give you a buy like that and start collapsing, and those are look, even if that was the US dollar. In fact, let me give you this statement for free. The US dollar and the euro are two currencies that are highly manipulated. Those remember, a euro itself is an index. When I say a euro is an index, let's talk about indexes. Your NASDAQ, they call it a NAS 100 because it's a composite of 100 uh, uh, top top companies that are listed in the USJSE, the New York Stock Exchange. So those 100 companies are combined together to form one index. So so that's why they call it an index. The euro is a composition of different countries that are included in the eurozone. But the eurozone has other countries like Hungary, Poland, Sweden, countries that are not Switzerland, countries that are not listed on in the eurozone, but they do trade with the euro. So that's why most of the time the euro currency is highly correlated with uh, the, Switzerland and Denmark. That's because those countries they trade together. So when you want to buy either a euro or a Swiss franc, you need to look into the Danish krona and see if these currencies are really going bullish or not. So that's those are the correlations. Though that's how those economies are connected. So trading the euro is dangerous, but trading the euro USD is even more dangerous because the euro USD is the most manipulated currency pair, as because they know that most people trade them, and that's the reason why most of the time you see that when you look into the indexes, you can see that they're not really that highly manipulated. Your Nasdaq and your S&P 500, S&P 500, they're not that they're not that manipulated, but the Euro USD is the worst. I thank you guys. I will see you on the next episode. Goodbye.